Just tell us what we're seeing in terms of price action here at the moment. It seems like everyone's trying to sell and pressing the sell button indiscriminately. What are your clients saying about what's been going on recently?
Well, my own investment thesis says that a global revolution started a few years ago, but because it wasn't a revolution with young men on tanks smoking cigars, it wasn't noticed in the way that some revolutions are. But this was a revolution fueled by populism, fueled recently by the breakdown in multilateralism, the rise of the nation state. And because the markets found it very hard to price those risks, they tended to ignore them. But these risks are now manifesting themselves. They're manifesting themselves pretty much everywhere you look in the world. And I think this volatility and this uncertainty is going to continue.
How long does that last? Are we at the beginning of this phase of perhaps trying to tangibly price that in? Because I would imagine that showing up in the form of this U.S. China trade spat, which is just perhaps one of the symptoms.
Well, the U.S. China trade spat, of course, again, you need a historical perspective on that. Now, what's happening there? By 2049, the 100th year of the foundation of China, China expects to regain its position as the world's #1 state, period. And I have seen detailed plans going out to 2049 to help it to achieve that. I've been to China over 200 times. I go there once a month. So I'm quite familiar with what is going on there. So this trade spat is just kind of the first manifestation of what's going to be a 30-year jostling for global supremacy.
It's a hegemonic war without the war and without the bullets.
Absolutely
at the
right.
moment, at least, if it stays, let's hope it doesn't even get cold in the sense of the Cold War, but it doesn't get hot at least.
I couldn't have described it better. And you see manifestations in the South China Sea, you see manifestations in trade, you see manifestations in the Belt and Road, you see manifestations in the bipartisan dislike of China now in the US. This is a very big thing. And I think the market, again, underinterprets it. It tends to look at the trade wars day-by-day basis. Is today a good day? Is today a bad day? Sees it waxes and wanes. But the direction, I think,
it's all headlines at the moment. You think that they're moving to, but not exactly the long-term trend that we're seeing is a more bifurcated market between the U.S. and China, essentially.
Yes, yeah. And it's a fight as to which attitude will become important. Remember, the Chinese think the last 300 years were a mistake. The Chinese have a very strong folk memory where they were top dog. And the Chinese attitude is just give it a little bit more time and they will be top dog again. America's cottoning on to that and, frankly, doesn't like it. I personally...
Are investors cottoning on to that? That's the point.
They're beginning to. They're absolutely beginning to.
Does that mean the next 20, 30 years won't be an investable market? Because that's a bit extreme, isn't it?
Oh, all markets are investable. I think it takes you back to value investment. I think the easy days of long global bull markets where you can invest in a tracker for 5 basis points. I say this as an active fund manager and watch the thing go up. I think those days are gone. So I think it's going to be a move back to value investment, a move back to looking at good companies. I mean, back to the Warren Buffett style of investment, because good companies see their way through this. And what do good companies need? Good governance. Some of the stories this morning, failures of governance. And it's often failures of governance create bad companies.
Gerry, you've been to China over 200 times, you say, so you know it pretty well. Is there any veracity in the way that the US is looking at China? Are they grinding the right axe, and is there an axe to be ground?
Well, China does what the US does and what the UK do. They exercise, hegemonic power wherever they can find it. And of course they try to gain IP. China may push this to the limit, but China nowadays develops its own IP, very, very rapidly. I think a kind of a myth has been created that somehow China is doing things that, nobody else ever has done or ever will do. Look at the Belt and Road. Many good aspects of the Belt and Road in terms of fostering economic development. Again, for the Chinese, why waste a good opportunity? If you're building a harbour somewhere, why not make it a naval dockyard?
And also, it's nothing unusual to what has happened before. For instance, let's have a look at the APEC summit, which took place in Port Moresby, where the Americans and the Australians are possibly getting together to have a naval base there, for instance.
Yes.
So that's one aspect of it, yes. Whereas Belt and Road is also taking up, perhaps, lacunas in American foreign policy.
Yes, and these are just two manifestations of it. China potentially hitting at US barley imports because of what's Australia doing. You're going to find much, much more of this. It's going to be great for you guys because you're going to have a succession of really interesting things to talk about on this as the months roll on.
Keeps our jobs a little bit entertaining, of course, Gerry. You mentioned you've been spending time in China. Obviously, Barclays itself has been seeing a big retreat in Asia in general. I mean, you've cut your equity and bond trading business. You've cut jobs in this part of the world. What is the Asia strategy now for Barclays?
Well, I'm here today for a very particular reason. The Barclays Bank board is meeting in Hong Kong today. And if you want a signal of the importance of Asia to Barclays, it's the fact that my board has come here today. We have 2,000 staff, 2,000 colleagues in Asia, 25,000 colleagues in India running the bank. Asia is vital to us.
We should actually also highlight that this is Barclays PLC, the international side of the bank, correct?
Absolutely.
So we're not talking about the ring-fence UK entity, which is another matter altogether.
We're talking about the corporate bank, the investment bank, the payment bank, etc., etc. We are Europe's largest investment bank. We're the 6th largest investment bank in the world. I'd like someone to explain to me how you could maintain that position without having very strong insights in Asia and a very strong Asian business. Now, you know as well as I do, banking models in Asia wax and wane, fashions change, but we are deeply committed to this region. We've had some bad times, but we're through all of those. I gave a reception for all our Hong Kong staff last night, and I was kind of delighted by the enthusiasm. Some of these guys have been on a rocket that went up, a rocket that went down, but now they see the rocket going up again. And everybody was very, very positive about that.
Well, how does it go up again? Do you get involved more heavily in China? Because the rules are being relaxed, you can apply for a license there and have majority control of an entity. Are you planning to do that, for instance?
We're developing the plans. I'm going from this morning to a strategy session on Asia Pacific. I'm not expecting anything dramatic, but I'm expecting steady steps moving forward. I repeat the point. How can you be a global investment bank without being strong in Asia?
Right. And I would imagine your place on the rankings would be a lot higher if and when, of course, you decide to really go all in onto the mainland. Is there any part of the business that you feel will do well onshore, just taking it step by step?
I mean, we like to position ourselves nowadays as a kind of a clever bank. Everybody says that, but to find insights that people haven't got. Cross-border M&A, complex financing solutions, bringing Asian companies to the New York and the London capital markets. So it's doing the stuff that's more difficult. And because we are now not a domestic player, we find partnering with other banks, other institutions much easier. So we see ourselves increasingly as the New York and London gateway for Asian banks, Asian financial institutions, Asian corporates who want to do things in those markets.
I think a year ago you were talking to our colleague Tom McKenzie, talking about joint ventures and saying that you weren't too interested in getting a majority stake. Do you still feel that way?
Well, my other job is I chair a very large insurance asset management company.
Yep.
I chair our joint venture business, Heng An Standard Life in China, based in Tianjin. That's a 50-50 business. I find that a remarkably successful way of operating in China. We have very close relationships with our partner. I run the board to the standards of a Fortune 500 company. I chair it. It's a 50-50 board. It works perfectly.
But what about Barclays?
Barclays has still got to develop its strategy there, but I'm an enthusiast for doing more there. I'm sure we will be doing more in China. The question is, as we develop over time, what format, who with, and how.
So it's not a 2019 story, is it?
I don't think it's... I'm not expecting any dramatic announcements. I'm expecting a gradual increase and a gradual strengthening of our presence here.
We got to talk about Brexit.
Yeah, I'm going to say, because how many questions about Brexit do you have to face all the time? And think, well, will you have the staff to be able to do all this?
I love Brexit because it's impossible to be wrong about it. Because it is such a mess. Anybody's point of view at this moment in time is as good as anybody else's point of view. I'm close to the Prime Minister on this. I'm close to the government on it. I think what you're seeing is that the reality of what Brexit is coming home to people. Challenge was, 2.5 years ago, people didn't vote for the reality. They voted for a fairy story about this. But any negotiation, always going to have two partners to it. And what we're now seeing is the results of a closely fought negotiation. And as people should have expected, if you're outside the European Union, it's not as comfortable as being inside the European Union if you want to do business with it. We're in a very tricky 2 or 3 weeks now. I think the immediate threat to Theresa May was overstated. Politicians talk with big mouths on subjects like this, don't always follow through. But there will have to be a parliamentary vote on this. The rational position is the government should win this because it's going to be chaos.
But this deal seems like it's the worst of worst worlds. But you can use the Prime Minister's words herself, Brexit means Brexit, which is a tautology of nonsense.
Compared with the existing arrangements, you're right, this is a terrible deal. But this is what Brexit is. For the last 2 years, people have been trying to do an impossibility. How do you reconcile two simultaneous equations, being inside a customs union and outside a customs union at the same time?
Yeah.
You can stare at that problem for as long as you like and not come to an answer. And that has been the essential challenge. Now, there is a hope that the entrepreneurialism and the indomitable British spirit will eventually carry us through that. And I can see that. So my view is it's going to be a rough couple of years, but it's happening. If you had another referendum vote today, the result wouldn't be very different. So we've just got to buckle down, support the Prime Minister, and get on with it.
What are Barclays' new steps here in preparing for the worst case scenario?
We are completely prepared. We were in the High Court in England a couple of weeks ago, starting the process of moving our European customers to Dublin. We will have a fully functioning major European bank based out of Dublin with an enhanced presence in Frankfurt early next year. These are not contingency plans. All over the city, people are doing this. We will be either the largest or the second largest bank in Ireland.